Quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, Coach Jay, can hear you loud and clear on this warm Monday. Hope everybody had a great weekend. How was your weekend, Coach?
Pretty good weekend. Pretty good weekend. I'm still recovering from whatever I caught in Jamaica. Feel like I'm going through it right now, but weekend was a lot of rest. A lot of rest. Like you said, it is hot outside, so try to spend a little time outside, but mostly indoors. Let us know, chat, how your weekend was. How was yours, Coach?
Um, Busy. I moved this weekend.
Okay.
That's always
Always a
a
busy
lot of
weekend.
work.
Oh yeah,
Yes.
always a busy time. For sure. But welcome to At the Buzz, our market recap. If this is your first time here, the goal of this session is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we could take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay. I've been coaching with Topstep for about 2 years now, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some my experience, maybe some wisdom, and hopefully help you become a better trader.
If we got our first time listener here, highlight time in the chat. Welcome, highlight time. Thanks for joining us. Great to have you here. You are all our audience. Let us know how you did for today. Were you up on the day, down on the day, anything that you learned from the day? And we will take a look at these markets. I traded in a couple different accounts. As you guys know, I trade my personal account from time to time. I was telling Coach Paul, I took a Dow trade for $15 and decided to lock myself out on the day because I did not see a ton of great opportunity when I was looking at the charts. And but there was some. There were some trades. We'll go over those for sure. Let us know how you did on the day. Andrew says no trades, felt out of sync, so didn't risk it. Good self awareness. Billy Bullish up 1.5K. Pie green across all props. Talk about sim farming. Hey, get your money.
There
Uh,
you go.
Kung Fu says small green. Plus 590. About got burnt at the end. Lucky to get what I got. Right. And we had someone else in here that said, I overtraded today. This was Samson. Overtraded today, still ended green, but could have been smarter and more patient. That is not the what goes in my journal at the end of almost every week. Be smarter, be patient. Um, then I don't know what is. But let's get into the markets. As far as news goes today, pretty quiet news day today. We did have some bond auctions. We know that later in the week is all the heavier news. We have JOLTS tomorrow. We have consumer confidence. We have a GDP number coming out later in the week. We have PCE. We have FOMC. Any acronym that you could think of, we have it this week. So pretty quiet day to start as far as news goes. We did see over the weekend some news about the EU and US trade deal. It looks like that tariff is going to be 15% and not any higher, which is great. The US and China are in trade talks right now. And know that the market has really been waiting for whatever comes out of that trade deal. Sounds like we're close, but it's sounded like we've been close a couple of times. So I think once we get ink to paper, it'll be a little bit more assurance in the markets that there is a trade deal that is done. Coach Paul, anything you got as far as the news goes today?
No, most of the news is going to take a back seat to, I think, GDP um, and FOMC. Um, but the EU trade deal did make a big move in a euro currency, and we'll go over that at the end. But that whatever happened, I mean, it was one of the biggest movers of the day
Those
on that news.
We also have the president comments on Russia. I'm going to make a new deadline for about 10 to 12 days from today. I'm very disappointed. I'm reducing the 50 days that I gave them. We did see oil pop on that as well. So let's take a look at the quote board. We have 35 different markets we can trade with top step accounts today. To the downside, we had why is Didn't like this. There we go. Today to the downside, we had the Nikkei down 1.42%, natural gas down 1.68%, and copper, our biggest percentage mover to the downside, at negative 2.83%. Copper moved on a headline. I'll pull up a chart really quick. Um, we know that there were tariffs a couple weeks ago. We heard about tariffs in copper. That was earlier this month, and it was a 50% tariff. We saw that spike. There was a headline that came out today that said Chile would be exempt from the tariffs in copper, and we saw a pretty big 5% spike to the downside. It got bought up almost immediately. Um, Funny, I actually made my money on this account in this trade. Uh, Shout out to the chat who kind of just watches everything. Somebody said, "Hey, copper's moving," and we were selling off, and I just got on board. Got on board, took it for a quick scalp, not looking for a whole lot. News driven move. And JD says it all the time: when the market presents windfall profits to you, take it. I didn't have a plan for trading copper. I saw somebody mention it, traded the volatility, and got out. And to me, that was the best trade of the day on this account. Um, and it took all of 2 minutes. Uh, to the
Boy,
upside
that was
today,
quite a
yeah, it was. It was on a
im-
headline.
interesting because Peru was it Peru or Chile?
Chile.
Chile, I'm sorry, Chile is one of the largest producers of copper. It's their number. I believe it's their number one export. Yeah, Rio Tinto, big company, large copper miners.
It's interesting for sure. To the upside, we had heating oil up 1.31%, RBOB gasoline futures up 2.4%, and crude oil. We've been talking a lot of shit about crude, but crude up 2.92% on the day. Of course, micro Ethereum needs to sneak its way onto that list. Honorable mention up 3.6%, which means you probably could have made 75 cents trading micro Ethereum. Uh, but crude oil,
Well,
pretty big move in crude. Go ahead, coach.
75 if you were trading 15.
Right, right. If you were trading max leverage, and you caught the high to low move, you probably could have made 75. I don't know if you would have covered commissions, but it is a market that is moving, right? I know if we talk about trading futures here, but I've seen some price targets in Ethereum that I haven't seen anybody talk about ever. Um, and I've seen some people talking about $10,000, $15,000 Ethereum, which has never been the case if you've been paying attention. So interesting stuff there. Probably a better trade if you can hold it. And again, anything we say here is not for trading or investment advice, just for educational purposes and information. All right, let's take a look at the equities. I'm going to go over to, what do we want to do? We're going to do NASDAQ or ES?
I'll let you make the call.
Right. Let's do the NASDAQ. I'm on the NASDAQ on the 30-minute. We did make new all-time highs. We did make new all-time highs in both the NASDAQ and in the S&P. It did not seem like it because if we look at this on the daily, what are we looking at here?
Oh, a new all-time high, and we're looking to just keep grinding higher. We've been talking about the grind. Unless some major news event comes in, or let's say the Fed raises rates, this is going to continue, in my opinion, from that chart, just to keep buy the dips. Interesting, we did have a dip to buy this afternoon, but yeah, there's nothing bullish in that chart. If we talk small ranges, that's when we talk about grind, it's just small ranges doing its job, going higher without much drama. And we saw that again today.
We did. Take a look at the price action from last night. We did gap up, pretty nice gap up here, about a 0.25% gap in the Globex Open from last night. I think some of the tariff headlines out of the EU coming out around this time. So we did gap up. Uh, Outside of that, we gapped up. We made an all-time high in the pre-London session. Continues to happen. Interesting stuff. That hour before the what we defined as the official London Open. And then we sold off from there. This was a gap filled day. What I'm looking at is, we have FOMC, we have PCE, we have a bunch of data coming out later in the week. Uh, what is the likelihood that we see huge range days prior to some of the biggest news for the week? Right now, the Fed Watch tool has a 97% probability of the Fed keeping rates the same. So you mean there's a chance, but we know on days like this, or on weeks like this, the markets tend to wait until that data comes out. So 148 points high to low range in the Nasdaq. Um, much cleaner price action in the overnight session. We can see Asia session bought it, uh, London sold it, and then the New York session could not figure out which way we were going. A lot of chop in this range. We heard Dakota and Baron both taking opposite sides of the market this morning during fast markets, and then kind of saying, "Hey, you know what? This isn't a great trading environment for their trading styles." So trying to stay out of it. Uh, we look at the first 30 minutes of the New York. That's not it. This is it. All right, Coach Paul, you want to say something?
It's about the same thing.
Oh yeah.
But my biggest thing, it just went and filled the gap.
Yep. Pretty much.
And we look at them when it filled that gap, we didn't get any, I'm going to say liquidation selling. This was slow market. Let's see what's there kind of movement. But we wicked one, two, three, four times into that gap, I think. And that's healthy, bullish movement. Um, I wouldn't be surprised if we move higher tomorrow.
Agreed. We could not break lower, right? Coach Paul's talking about all of these wicks here. Couldn't break up either, right? If we look at that first 30 minutes, we kind of just chopped around in that range. Volume was flat the entire day. The market very comfortable trading these prices, maybe accumulating a position in this range. We did have this huge volume spike, which was most of the range for the day. 50.3 minute candle. Uh, was there opportunity to trade from here? Maybe. Closed above it. We did get that J trade, but just with the lack of range for the day, there wasn't a whole lot there. Um, you
Well,
didn't get it.
yeah,
This was a negative risk to reward trade if you took it at the highs, right? You were risking
it,
50 points to make 25. Go ahead, coach.
yeah, I was just going to say that's a huge candle
Yeah,
for this environment. And we say if you do take that trade, you have to accept that risk.
never got stopped
Um,
out.
Never did get stopped out, and VWAP never left the range. So more of the summer doldrums. Um, and that's the one that closed the gap. Was that the first time it closed the gap on that?
That was yes, that was the first time it closed the gap. Yep,
Okay, boy.
highest volume of the day outside of the open and the close. Closed the gap. Um, I think, and like you just said, Coach Paul, that's very bullish. Maybe not for today, but watching this range, as long as the market continues to hold above this price, we know that there are longer time frame market participants. Not everyone's a day trader. We closed that gap, and we did it in the S&P as well. As long as we continue to hold above that, I am looking for opportunities to buy this market on longer
That's
time frames.
excuse me.
All right. Well, let's take a look at the S&P really quick. Pretty much the same thing here. Hogue during the opening call was talking about some single prints. We know Hogue is a profile trader, market profile trader. What he was looking at was basically this 30-minute candle from Friday. You can see we came down. We see this volume profile here, kind of thin area in that volume profile. Coincides with single prints. If you look at volume profile, it'll look like the low volume node. But we came down, filled that, and didn't get as much of a bounce as we did in the Nasdaq. S&P looking a little bit weaker, but the same idea. Looking for that gap fill. I think now that if we can, get back above Friday's range, this well. Um,
You know what's interesting about the S&P versus the Nasdaq is it continued past that close
yes,
and it more than filled the gap and really didn't recover like the Nasdaq, but still closed the gap. And this is all pretty light volume on the daily. which, at the end of July, you can expect this.
3 trading days left in July. Pi says ES was the best market today, and I would agree with that, right? Where we said the Nasdaq chopped around in that 30-minute range pretty much the entire day. The S&P at least left that range. Right? Volume left the range at the end of the day, but it did, you know, trade a little bit lower while the Nasdaq was in a 65-point range the entire day, which in my opinion makes it hard to trade. I know we had Jim on. First time on Topstep TV, and he said this is the best price action for his style of trading. So you don't want to make it seem like it's like, oh, this is shitty price action. It's like, well, it depends on how you look at it, right? Some trader might see that price action, know exactly where the extremes of that range are, and able to scalp both sides of it. I'm just not that trader, and I think it's important to identify what type of trader you are.
It's probably the most important thing. You need to know, we've said it before, know thyself, and know your style. This isn't my kind of style, but doesn't make it that there's no opportunity.
Mo in the chat says this is perfect, a lovely price action for Mo.
Yeah.
There you go, right? So it's gonna work for someone, right? No, I think be very conscious of hearing people say, "Oh, this isn't great price action," that might come from somebody who you trust their analysis on the markets. But if your eyes see something different, trust your eyes. Trust yourself. At the end of the day, is somebody's making money in this range. I just know it's not me. uh, all right,
Hey,
let's.
Edwin Montanez. Hi,
Mhm.
coaches. Can you look at the NQ 7/18/25 volume? Oh, 2/18/25 daily chart.
February
Wow.
18th, 2025. What are we looking at here? February 18th. 25. This extremely indecisive. Oh, those are the 3 daily dojis before the sell-off. Were
At
those
all-time highs.
at
Oh,
all-time
yeah.
highs? Okay.
You still have them framed out.
Oh, no, I just did that
Or you
again.
just
I
do
just
that
I just
again,
framed it.
but
I
you're
just framed it. Yeah,
quick.
yeah.
Wow, you're a professional.
Thanks, man. Play one on TV. Uh, yeah, those 3 daily dojis, Edwin. That was go back and watch at the buzzer these 3 days, the 17th, 18th, and 19th. We were talking about how indecisive these markets are, and then we sold off. I'm curious, Edwin, that why you wanted to look at those. Are we seeing something similar here? Not really. I think it's a.
Yeah,
Go ahead, coach.
and what was different at that time, we weren't making all-time highs. We were rejecting it, a little different here. Really light volume, and that's February, where you can expect light volume in the summer markets. But at that time, and then there was then tariff talk came. But hey, anything can happen. But this is a little bit different.
Yeah,
We are making all time by a tick, and then we break. So, um,
I don't remember what this kind of reminds me of last July, to be honest. And I think July 11th was that day where we had it was CPI before the market that kind of sold us off. Kind of what this feels like a little bit, but we'll see. December 18th. Let's take a look at December 18th. Doesn't look the same. So why am I looking at December 18th? That was the last time the Fed cut rates. That was this daily price action here. And it all kind of looks a little different. Again, it's not going to look exactly the same. But that was a time where we were making all-time highs. Then we had a Fed rate decision, and that was the high. So Wednesday will be interesting. Wednesday will be interesting. Sure. Don't think we get a
well,
Fed rate cut, but go ahead, coach.
especially with the background of the pressure that the president is putting on the Fed to cut rates to, what was it, 1%? Why do I know my credit cards won't go down if that happens?
Right.
But um, I think that with that background, there could be a surprise. I'm not saying there's going to be, but anything can
H.
happen, and you never know. Um, could happen. So, boy, wouldn't
ACH.
that be any? Wouldn't it be interesting if they cut it by a 1/4%?
Markets are not expecting that at all. What would happen?
Eh, Oh, I think the markets would rally big. Bonds would break though. Um, but we're just talking possibilities here. We're not. But hey, who knows? Um, but in
Highlights.
the meantime, grind, grind, grind.
Highlight Time has a question here. When is summer trading officially over and the volume comes back? September. I think kind of just the common consensus is after Labor Day, which is right around September 9th or so. I might be getting those dates extremely wrong, but it's usually like after the second week of September, where we see the volume start to come back in, and it could happen whenever, right? If we look at last year was not a traditional summer in the markets at all. We had extreme volatility all through July and August last year, so I think traditionally people are looking at that second week of September, but it could happen at any time. Mo just said it right. Once you see the kids go back to school, that's usually when that volume starts to come back.
Well, that's an interesting question, Mohammed. The kids go back to school in September, where you're at? Hmm.
For me in New York here, it's September. I know in the South it's usually August, around there, but I think middle of September is usually what it looks like from what I understand. All right, let's take a look at gold while the equities are rallying, making new all-time highs. Oh, real quick, I just want to call out those all-time high prices. All-time high in the S&P 64.5775 and all-time high in the Nasdaq 23,585 and a quarter. Gold. While the equities are rallying, Coach Paul, what are we seeing in gold?
Oh boy, what a very heavy action. Now we're talking. We had that chance last week where we had that sharp rally for 3 days and right back into the mix. But this time, that 20-day moving average is back under the 50, and we're not getting any bounce. Um, that old trend line, that uptrend line, we settled under that for the. Oh, very good, Paul H. As I was speaking, Paul H. hit the like button.
But and
Hit the like button.
for us, oh
Um,
yeah, there we go.
yeah, GC has broken the trend lines that we drew. Thank you, Paul H. That's funny, but yeah, I saw that. We actually opened underneath it. Now, on the trend theory, there's still a decent probability it goes back and tests the trend line, the the underside of it, but that's
This
not.
happened because, like you said, we opened under it, so we did have to. At one point, this was a green daily candle. Is could this be
Hmm.
considered the test of that trend line?
No, because it's the one candle.
Okay.
So then that we could see, in a couple days, maybe even tomorrow, go test that. But the bottom line is how long we've been in this wedge pennant for what, three, almost 3 months now.
It's been I've been counting the days, and it's been 97 days since we made all-time highs in gold.
Yeah. Um, so I mean, to me now it's starting to get a higher probability of a breakdown of the 200-day moving average. Um, and where is that? I mean, because
200-day moving
we
average,
definitely.
which is this white line on my chart here, is down at 3060. The 20 and 50 moving averages for anyone that's new that Coach Paul was talking about are the yellow and purple lines. The yellow one is the 20, purple one is the 50. and there's no room between them at all, really.
Yeah. Um, Very heavy. Um, Tonight, I think tonight's going to be interesting. Let's see last night's half an hour action, and from the opening, the Sunday night opening.
Real quick, coach, before we do that, I want to ask you though about this kind of horizontal support that we're seeing here in this market. I know we're breaking that trend line to the downside, but near this 3,300 area, we continue. And again,
Mhm.
low tick of the day today was that major 3,300 number. Uh, is this breaking or this?
Well, we're
We'll
getting a
see.
series of lower highs on the rallies.
Yes,
We're
yes, we are.
in that pennant that we finally broke. So, and from just a trend line, a trend following, this that's the end of it. Now, that's the theory. Of course, anything can happen when you say that it's not an escape. It's or a reason to go why I was wrong. But we deal in probabilities. So
Yeah.
the probability is that the rally is over for now. Um,
Right.
but this is up. How long has this been? This trend line goes back to I think beginning of the year.
This is April, but we could probably extend this. Yeah,
Oh,
we could extend that out
oh,
as far as you want to. But
yeah. That's
if you draw it that way, like you said, this is really the first close below it. So
yeah.
that is different. I mean,
Yep.
depending on where you put this thing, but
Okay, you can put it. Yeah, we're still. I mean, to me, those series of lower highs off the all-time high, which we had a blow off top with the biggest volume, just keeps giving me more evidence that whoever was buying it or the reason for buying it is dissipated. Now it's up to the longer term ownership to push it higher. If they don't, and they have, maybe they have, but right now in the present, we've closed under that long-term uptrend line. Period.
just Hogue. I know Hogue has been tracking the delta and open interest pretty much for the past 5 years. I'm gonna ask him tomorrow what that looks like. All right, let's
Yeah.
go ahead.
Take a look for last night's action.
Yeah, very interesting opening here. Kind of we gapped down, pushed lower, and recovered. We're under that 200 moving average on the 30-minute, which is this white line up here, trending lower over the past couple of days. We came right back up to the 50. Volume never left this range for the day. And
Key. That's further where we're talking further evidence. There's the underlying that was a gap lower, right? With that huge, what is that, a $20 range in the first half an hour on a
this
Sunday
is
night?
$31.
$31. That's a 1% move, right? Just rough. And the first, and that's liquidation to me. The way I see this, it was Sunday night.
Wasn't
It
even
wasn't like they
like the first minute.
okay, even more. So, can we assume 50% of that first minute is selling because we were lower? So, what's the volume on a Sunday night? They couldn't wait. Someone just said sell.
Yeah.
I mean, and that's and we never get out of that range. So that. In other words, there was no value in buying that outside of a scalp, right? And look at the candle when it went right back to it with the highest volume of the day, which I think was the close, right?
This was
New
the
York
equity.
close?
This was the equity open, actually. This one right here.
That was the equity open. Well, I'm
Yeah,
this
equity
is
open and then into the New York session open. That opening range trade, I don't think we got in it on the house today. Man, what a trade that would have been. 1 minute opening range. It actually okay. So here's why we didn't get into. It actually triggered a long on the 1 minute opening range. It popped up
mhm.
above the opening range first by a tick. Didn't really even give us time to get into that trade, and then a short right
By the way,
afterwards.
that was a great loss.
Oh yeah, yeah. That would have been a loss. I would have been very happy to take.
I I don't know how many times people talk about great losses. If you're gonna trade, you look at that and you bought that and you got out, that's a great out. T we can consider that a good trade. Like, you dodged a fastball to the chin because that you never had a chance after that. It was
Oh, I mean, you lost $300 in pretty quick order, right? That was a $300 loss with a mini in about 45 seconds. But like you said, coach, that's why we measure risk, because you're completely wrong in that instance. I think one of the things that I really love seeing about that opening range trade, and JD, I think he plays it up for for TV sometimes, where he's just like, I hate this market, and when it causes a loss, that loss is predefined before taking that trade, and it's never going to be an account blowing loss unless he decides to take it with a 100 lot one day, which is not going to happen, right? So do you want to lose $300 that fast? I could think of a better way to spend $300 maybe. Uh, but you know, if you hold on to the conviction that this market to uh needs to go up, you pay a lot more than that 300.
and, just why we bring and to bring that into focus why that's a good loss and, man, that's a good trade and you lost. If you're a newer trader and you haven't learned how to frame out your risk or you know your exit before you get in, these are the classic markets where you might freeze and say, "All right, I'll get out if it comes back, and I'll take a smaller loss." But I can't. I'm not taking a $300 loss here. It comes back to the old term, the first loss is the best loss. One of those we hear in business, which when you first hear it, like, what are you talking about? No loss is good.
Right.
When we first come in, it's like loss. That's for losers. But when you see a trade like this and you got out, man, you dodged. You might have you're gonna get nicked, but hey, you didn't die on the line. So, boy, that really. The more I look at today's action, the more I'm just. I might get rid of some Krugerrands, but
Big bounce
seriously,
off of 3300 to the tick. Did
yeah,
not trade a tick lower
yep.
than 3300s. Bounced off of it. So if you were, looking at that whole number level as a potential opportunity, maybe to get out of a short, or to get into a long. Here's a to me a perfect example of paying attention to those whole number levels. We're not the only ones that do. We know that more often than not, those are going to be the areas where most of the liquidity sits on the books. Why is that? Because everyone knows when gold is trading at whole number levels, or the Nasdaq is trading at 23,000 or 25,000. So there's going to be a ton of orders there. Watching the market's reaction to those orders is extremely important, or to those levels, in my opinion. To the tick, perfect bounce. Is it always going to work out like this? No. But you see what the market's reaction is, and with all of this selling, no one in the world. The way I like to
One
think
of the
about this, Coach Ball, there was not one person in the world that thought or needed or could trade gold lower than 3,300. So if I'm selling here, I'm the only person
yeah.
in the world who thinks that we should sell that lower than that. And my mom used to
Well,
tell me
you
all the
know,
time that I'm unique, when I was younger, but, that uniqueness doesn't help the market go lower. Like, who gives a shit what you want, Jay? The market's not going any lower than
uh,
this.
well, you know what? If we put a 5-minute bar or candle on that, I think we do get a J trade.
On a 5-minute,
Nope,
no, because this one was
nope.
higher volume.
Yeah, but interesting, right? And you know what? It wicked there. It didn't.
It's a nice reversal. Got a
Oh,
Dakota 3-bar reversal off that. It just wasn't the
yeah,
high volume.
but
Eh,
look at the size of the candles to the downside and the volume.
right.
Wow, that's I'll consider that liquidation. Because you know, when beginning of the year, all we talked about was, look, they'll keep buying the dips, and we saw the same pattern. Um, we're not seeing that pattern. This is to me a liquidation pattern. So 3,300 tomorrow will be a. Let's see
To
what
watch.
happens.
Level
Um,
to watch. Level I'm watching right now is
Matthew,
100. 100. See if we can get to 100 likes in the next 30 seconds. Ready? Go. I'm gonna start doing giveaways on this on at
uh,
the buzzer. See if we can get this get these likes up. We appreciate you all watching though. Anything else you have in gold, Coach Ball?
that's it.
Talked about the other metals. Courtney, I saw your message in the chat. Said, the metals just kind of seem like they're taking a little bit of a break here, maybe exhaustion. We already talked about copper, that huge move. That was a headline. Where does that put copper on the daily? Tested right back into 50% of the 50% tariff candle in copper, right? Everybody remembers this day, 50% tariff in copper. We saw a 20% move to the upside, came down and checked exactly to 50% of that candle here, and bounced. Why does the market do this? I don't know, but it does it all the time. Uh, Almost to the tick of that 50% and found some buyers there. So interesting. Platinum, I did see as well, selling off a little bit. Saw platinum trade above 1500 a couple of days ago. Maybe looking a little weak here as well. It's kind of hard to say. What do you see here on this daily in platinum, Coach Ball? Because I was looking at this one.
Well,
This
we're
looks
holding.
interesting to me.
Yeah, we're holding the 20-day moving average, but we're not healthy. I, just looking at that, there's a gap to fill, isn't there? Maybe a small gap down at the 1350 level. But look, 1, 2, 3, 4, 5 days in a row of selling. Um, I don't like the action here. I mean, it just when we talk about it, just the buying has stopped.
Yeah.
And now the 20-day is what? Flattening out the average. Why would it flatten out? Because we've really stayed in a range here for the last 2 weeks. Well, I'm not willing to sell it yet. It feels heavy. I mean, this could real quickly go right back up, but considering that copper's hit a bit bad, I mean, it got hit hard today. Gold, what did silver do? Most likely got hit also.
Right back to that 20
Hmm.
moving average also. Interesting.
Hmm. Seems like this coming into FOMC Wednesday, and we're all sitting on those 20-day moving averages in the metal. I think there's huge opportunity coming here. Let's keep an eye on these.
Keep
Um,
an eye on them. Tags Worldview, another first time viewer. Welcome to our another first time viewer. Do you
well,
guys take trades during market hours on the live stream? We do. Tomorrow I will be on Fast Markets, which is 9:30 Eastern time to 12 p.m. Eastern, trading with Coach Dakota and the rest of the team. And we'll put on some trades if we see good trades. Thank you for joining. Coach Paul, I like what you just said though. Keep an eye on these. Maybe put these on the scouting report. These alternative
yeah,
metals have had pretty crazy rally over the past month and a half. 2 months and presenting a ton of opportunity.
Silver, copper, gold. Gold looks the weakest out of all of them, which is a complete difference than we've seen all year. Um,
'Cause, let's take a look at one of the biggest or the biggest percentage mover to the upside today. How it did it, I don't know, but crude oil, which was also the biggest percentage mover to the downside on Friday. Are we seeing volatility start to pick up in crude? Is this an anomaly? What's going on here, Coach Paul?
well, you know what we're doing? Holding the 200-day moving average and the 50, and it's all crossing. To me, this sideways movement after the $7 beating from um what a range.
That was a crazy
Now,
sell-off.
the, d- can you I can say we found value here. Right? You know, it's a sideways movement. Um it's
Very
too
sideways
early to
action.
say. The half hour starting last night. Let's frame that out.
This is now 2 days in a row where crude has probably been the best trade. It's like finding a needle in a haystack, though. But when it
You know,
trades,
it's
I go ahead, Coach Paul.
no, go ahead. Finish your
I was
thought.
gonna say I don't hate trading crude. I just hate trading crude when it doesn't move. Crude moves. It's a great market to trade. It's a great market to trade. It just has to move, and that just doesn't happen a lot.
Yeah. And well, when it's in balance, you and I are going to feel that when we trade in the same kind of mindset. But we just talked about some people love NASDAQ action, 65. And like Mohammed, he loves that kind of action. But opportunity, right? The opportunity I would talk about is an extended movement. This is a classic extended movement. It was interesting. It was the largest percentage mover to the downside on Friday. And it closed on its low, like literally on its low. Um, Only to turn around and say, okay, I think it's just trading day to day.
That's what it
Because
looks
wouldn't
like.
that make sense in a balanced market?
We've seen
Like,
it do that before, right? I think it was all last year where it traded above the 200 moving average, below it, above it, below it, above it every day until it finally broke out of that range for a couple of weeks, and then went right back to the same type of price action.
yeah. But quite a move from that opening. Um, Now, in my world of worlds, my dream world, we'd do this for a year. Just open it and just move up in a half an hour. For a short-term range trader, I always used to say, looking at minimum, maximum type of mindsets. For a market maker or what we would call locals in the pit, their perfect world would be 6 bid at 7, a million up, and it's trading. It's never going to happen, but that's why um, understanding what market fits your personality is really important to your success. Those markets don't fit my personality. That kind of market in crude does. Neither is right or wrong, but understand that so that you can have a trading plan and identify the opportunity you're looking for. To me, the crude, that's what I like. We have a question here from, did you go through it? You often use a 30-minute chart when
No,
referencing
we,
simple moving averages. What's the significance?
I'm gonna throw that one to you.
All right. Well, here, if the 30-minute on a day trading time frame is a longer term time frame. Where it started from was from on the trading floor. All your trades you would write on a trading card. They weren't recorded immediately. So then at the end of 30 minutes, if you look at a profile, they have letters A, B, C, D. Well, that was A was the opening half an hour. B was the second half an hour because you had to hand in all your trades every half an hour to be key punched and then processed. So what in that half hour time frame, it created the market profile, which is still very popular. Was even more and was even bigger. But it's also a time frame that gives you a little longer term view. And then what I do, I look at the daily, the 30-minute, and I used to be the 5-minute, then the 3-minute for day trades. So the 30-minute gives me a feeling of which side I want to trade. I don't, and this is me personally. I have trouble trying to buy low, sell high. Sounds crazy. Buy low, sell high. When you say that, it's a very um personal thing. What is the high while you're rallying, right? And I'm trying to sell the high, and I would get caught in selling a high, and I've said this before. In the late '90s, early 2000s, I keep it, and it just kept on, kind of like what the S&P is doing now, just kept on going higher. I got to sell 1,000 highs. I was really good. The only problem was in make a new high.
Right.
Well, what I'm bringing into that is it gives you a sense of the direction that you want to take. To me, then I can break it down on the 3 minutes. And we look at this 30-minute here, what we had in crude, looking last night, seeing that it made the low on the opening and then broke out of the first half an hour. Yeah, I'm interested in buying it. Now I can frame out a strategy for buying it in the 5-minute or the 3-minute. Hope that helps you.
Thank you for that, Coach Paul. Futures trading NQ says, can you explain the 1 minute opening range? What it looks like you went off of was 10 minutes before the market opened. All right, so you're talking about gold. So the official floor trading hours, which traders tend to still look at for gold, is 7:20 Central Time, 8:20 Eastern. So you're 100% right. We went 10 minutes before what that open was. But if you watch the guys during the opening call, they're looking at this first minute candle that starts at 7:20 Central Time, 8:20 Eastern. And then the 1 minute opening range is identify the high and the low of that candle. You're long above the high, short below the low. There are times where that trade is the trend for the day. In this case, like we said, this would have triggered a long. This is why Coach Paul said this was a great loss, because that 1 minute opening range ended up being the high of the session, uh, which we've seen happen in gold a bunch of times recently. Is it there? And at that time, again, it's 7:20 Central Time for gold, 8 a.m. for crude oil, and then 30 for the equities. We got a question here from FVG Trading. So I love your name because it tells me that you're an ICT trader. And if you studied ICT's strategies, which I don't, but I know that one of the things that he talks about in that mentorship is not taking too many trades. There shouldn't be a whole lot of trades that you take every day. Question is, when should we know when to stop trading? Any advice on that, please? I took 23 trades, locked myself out at positive $144. Took 23 trades. Now, the way Topstep X is going to count your trades, it counts each execution as a trade, right? So if you scale in and out, it's going to count those as trades. I don't necessarily count that as a trade as long as it fit. I don't count those as individual trades as long as it fit one trade idea. Uh, took 23 trades. If those were all separate ideas, I'm going to ask you a question. How many of those 23 trades were actually good trades? Not based on results, but based on the setup. Of the 23 that you clicked the button, if they were all separate ideas, how many of them were actually good trades? 5. Okay, right? So now there's 18 trades that and we're just gonna reverse engineer this, right? There are 18 trades that you, by your own admission, said those are not good trades. What was the reasoning for taking those? Right? Why'd you click the button to begin with? If you can find the answer to that, that's when you know to stop trading. Is if it's a clearly defined setup, then go ahead, take it. There's no guarantee that a clearly defined setup is gonna work out. But if I find myself clicking a button because I'm bored, and again, this is going to happen. One of the things, Coach Paul, and we'll get to a little bit of mindset stuff a little bit here. One of the things we talked about, mentioned it a couple times on this show and on slow markets. Traders say they trade for freedom. I told you guys I made $15 today in my personal account. Made one trade. I had to figure out what else to do with the rest of my day. Right? And it couldn't be going back to the charts and clicking a button because I did not see a great setup. Now, I could watch the charts. I wasn't really feeling well. So ideally, I would just go outside and go do something else. But there are times where you're not going to, there's not going to be anything clear for you to take based on your setups. You might see somebody else making, we might see somebody on the leaderboard tomorrow that made 20 grand today. I can't look at that and say, hey, I need to figure out how I could have made 20 grand today because my trading playbook doesn't fit that environment. So you have to know when to be bored, when to not click the button, and that's when it is. If you find yourself, and there were a couple times today where I'm like, damn, I ate all day. I go look at the charts, or I'm listening to Top Step TV, and I'm hearing the guy say, "Oh yeah, these markets are still just chopping around in the same range." That's enough for me to say, "Hey, you know what? I'm not supposed to be trading right now." What would you say to that, Coach Paul? What's your answer on that? How do you know when to stop?
Okay, well, there's two ways to think of it. Stop to preserve capital.
Hmm?
The way I do that is if I'm having a real bad day, and through experience and working with a lot of traders, you can say stop, and people just, and I've done it myself, just go, okay, yeah, 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 and keep trading.
Yeah,
Um, yeah, yeah, but there's just one more. It's the reason we get, just one more. It's very
that's the
addictive,
worst quote in trading.
right?
The worst
It
one.
truly is. Now, fear of losing money and accept the risk, yeah, but now what it comes down to is what are we managing? Our account balance. This is our account balances, and you're not managing the market because you can never do that. You can manage, we'll go into that in a second, but to me, if you lose 10, at the most 12% of your account balance, you need to stop. Something's wrong. Either it's not your day, most likely it is you're not accepting losses, at least from my experience, and you're just trying to be right. And when you look at percentages, when you get to that percentage, think about it. I mean, you can survive 10 to 12%. And there's a 50% where they not stop you. It's too late then, to me, because now think about it. If you get a 50% drawdown on your capital, you're going to get 100% just to break even. And if you're doing that day to day, you're not being consistent. So squeeze it back down 10 to 12% of your capital. So in other words, if you have $5,000 of capital, it's 500 to 600 period, done. That's what preserving capital means. Capital preservation. The other one is, like Coach Jay just said, you have to define the trades you're willing to take. And this is really important. You have to define your trading strategy. It can't be, oh, I like this because he liked it or she liked it, and this one looks good. It's not, it has to be well defined. You have to have your exit and how much you're willing to risk and fully accept that. That's where discipline comes in. That's where a good trader, truly, it's like a great poker player or a blackjack player or a great businessman. Is knowing how to take risk in percentages and identifying an opportunity, not just taking every opportunity. I hope that answers your question.
Good question. Great question. And it's going to be different for every person. What I will say out of that is you ended the day positive. So if you could eliminate some of the for lack of better words, garbage trades that we make, maybe even more positive. All right. Bullet Traders has a question for you, Coach Paul.
Mhm.
Who do you recommend for seasonality analysis?
Moore, Moore research, mrci.com. They've been at it for longer than I have. But they have great seasonal analysis, and that's what they specialize in. Um, Coach Hoop is a big fan. He watches it all the time. When I was on the floor, especially in the grain room, a lot of people wanted to see what Moore was putting out, and it's more for commodities than equities, which kind of screwed me up because I always thought, I'll say this right now that there is seasonality in equities, but overall equities go up, right? When they're not going up, we have a panic. In commodities, they cycle, they move, they really follow the laws of supply and demand over time. And that's where you can get seasonal. But highly recommend more research. MRCI.com. Did you like that, Coach?
That was good. That was
Dot
good.
com.
All right, good stuff here. We talked about the big four, Coach Paul. Anything on your scouting report? Going into
Oh,
tomorrow, the rest of the week. What are we looking at?
that
You see that
was
reaction
we
chat? What are we
didn't.
looking at?
Well, Euro currency. Take a look at the daily.
Euro. We had some questions on the dollar also, so I may bring up a dollar
Uh,
chart here. But here's the euro.
and which would be, when we look at the euro, that's the 80% of the dollar index movement comes from the euro. Look at that. What is that? From the 20 to the 50 in one session on the moving average. We're sitting on that 50, and there was a huge move today. Let's this needs. So we just looked at crude where it had a huge move down.
You to move up
Now,
in crude, right?
oh, huge, yeah, up from Friday's down. Um, I'm being on that 50, and this was, look at this. This was urgency.
Andre mentioned something on Topstep TV today, and I know we don't trade too much as far as correlations go, but stronger dollar means higher crude prices.
Hmm. I would think it would be the
The
opposite,
opposite. Okay,
but usually because the crude
I got to
oil.
make sure he said that. I said that right, but
Uh, um, it well, the crude or West Texas Intermediate is priced in dollars. So, um, My feeling was that it's the other way around. Cheaper oil prices means a stronger dollar. But that can change. But there is a correlation. Maybe we should look at more research. Um,
See what
but
you did
look at
there.
this move. Yeah, um, Asia session. We opened, we gapped open higher, and we were over the 200. Was interested in buying it. I said, well, what do I have to see some strength. So I saw some, in the gap, but we talk, what is it? 80% of gaps are filled daily.
Yeah.
It's
But
something like that. I don't know. We'll ask Mr. Pareto on his principles. Um, you math geeks out there, you'll enjoy that. Um, but look with VWAP. There was no look at V just flat after that gap open. And then we closed outside of that first half an hour. I don't know
all
what
right.
the news was. What was it? The trade
I think it's a trade deal. Yeah. I
tariff?
think it's a trade deal. EU
All
US
right.
trade deal.
So let's look at what happened at European time.
Again, the volume coming in an hour earlier than we normally see the euro open, right? Here's 2 a.m. Central. Here's
Yeah,
1 a.m. Central. So
maybe it's coming out. What's east? Maybe it's coming out of Poland.
maybe I don't know. But yeah, that
Uh,
volume came in and they were not playing.
yeah. Um, and think about that. Those were new. It kept on making new lows every half an hour
We're making new lows as we talk here.
as we talk. Can it turn around and rip back? That's a possibility. But this is after news. We're at that 50. Do we see a huge move down? Is it giving up the ghost? It's a possibility, but the intensity of that move today, I think we can get follow through. That came so hard, and on top of news that the market's been waiting for. Um,
Zooming out, it also happened at an area where maybe we can check its continuation
mhm,
chart, but you have it. These are like multi-year highs we're seeing up here. Multi-year lows we're seeing in the dollar. If you invert this chart, somebody had asked about the dollar. This looks exactly like the dollar chart.
yeah, it's
Like you said, 80%.
and that's why that dollar index isn't trading like it used to,
Yeah,
or was intended to, because from the geeks I worked with there, and they broke it down. They're like, just trade the euro. And I was like,
makes sense.
I don't want to, but it made sense.
This is
Um,
this is interesting.
let's this is very. Let's do a trend line on that.
From
Yearly lows.
here,
Go to the lowest low. Yeah, we can do that. Yep. Now
close
let's
below it.
take the other one other thing. Let's do a line, because I'm a big believer. A line chart. I'm a big believer in. Wow. So
Really, wherever you
why I
draw
like
this,
it.
you get the picture.
Yeah, there it is. Go from that low. Uh-huh. Either way, it's losing its momentum. Another thing with a line chart, do we see a head and shoulders? No. Um, definitely weakness on a settlement. Um,
Lower high here.
lower high. You could say it's a head and shoulders with a
Slanted one.
higher slanted one, and those are
Quasimodo head and shoulders.
So let's oh, you heard it here first, folks. Co Coach Jay called it. Um, but the biggest thing to me is that the intensity of this out of news. Euro currency does not move like that, so I think it's got a chance to follow through. We'll look at that 50-day moving average as a benchmark, and this could pick up steam.
This
That's
doesn't
my
is Coach Paul's scouting report, and if you know, you know, because this was on your scouting report to the upside this entire move. So
yeah. and
I'm paying
By,
attention.
by the way, watch that first half an hour.
Yeah,
Maybe I think that's going to be important. Or European Open. Um, if it rejects this 50, it could gain a lot of momentum to the downside.
coming up on time. We passed time. Coach Paul, any final words for the day before we go?
We talked about when we hit. I'm just going to bring it up again. Your job as a trader is to manage your account balance. That's what you're managing. We talk capital preservation. Focus on that. In overtime, you have a much better probability of success. And that's it for today.
Manage your risk. Richard Harris says, "Live long and prosper." Uh, Paul H, we love having you here. We love having you all here as well. If you can do us a favor, hit that thumbs up button. We appreciate you all. Tell your friends and family to come check us out as well. If they're trading, if they have any questions along their trading journey, Coach Paul and I are here to help you out. Andrew, thank you as always for helping us run this session. We got Coach Hoop coming up with a session in Discord in about 9 minutes, and then Coach Ray and Coach Vince 6 p.m. and 7 p.m. Central Time, and of course Coach Dakota with Slow Markets at 7:30. I'll be joining him tonight because it is Monday. Trade well, manage your risk, everybody. Yeah, I'll look at the euro for tonight's trade. We will see you all then. Have a good one.
Bye.
Bye.